That's what it is.
No, man, you're fine. Now we are live. So that noise part, some people might have heard if they like logged in immediately.
Oh, yeah, that's fine.
All right, Robert. Hey, first of all, Robert, I want to go ahead and thank you real quickly for you being on here. We had this podcast. We started about sometime in November, and we've it started off as one of those things where we go off slowly. We'll see what happens. Try and bring people on every 3 or 4 weeks. But you know what? It kicked off to the point where hey, you're doing a podcast. Cool. Can I be on it? And so, yeah, we have the name of the podcast is Luciano Martinez or Martinez RGV Homes, the Beyond Realty, the RGV strongest realtor. There is a reason behind that, Robert, but we'll get to that later down in the podcast if we get the chance to. But one of the things that I wanted to make sure that that I emphasize is that we don't always just talk about real estate. Sometimes we talk about people that been successful people. We talk about people that are running businesses, like yourself. People that have been successful in it. Just as examples, right? So we talk about people. We talk about football. One of the things I like to talk about is football.
Talk about football all you want if you would like to. We can skip all the real estate stuff and talk about football.
Yeah, we can talk a little bit about football. I don't know if you know this, but I played football at the University of Texas.
Oh, I didn't know that. That's great.
Yeah. So I got this is one of my jerseys, and I have another one up here. I have 4 jerseys hanging up here and whatnot. And we can
great school, man. That's a great school. My son goes to school there now.
Nice.
And
what's he studying?
Yeah.
What's he studying? Huh? Economics?
Yeah.
Nice. You want to be a loan officer?
No. He wants to do something else, man. So we'll see what he wants to do. I hope he figures it out, but he's on the right path. So I'm excited about it. Yeah.
And was he a freshman?
He is a sophomore now, and he's doing very, very well, and I'm very proud of him.
Good. Excellent. I think I saw a picture there once or twice. You might have posted on Facebook, and put a hook 'em horns, baby.
Yeah, I post a lot of
any opportunity I get, I go put a hook 'em horns, man. And people ask me, hey, do you have a fair NFL team? You can say I grew up a Dallas Cowboy fan, but I steered away, and I'm more of just like anybody that goes to the NFL that with UT. That's kind of like where
sure,
the route that I've been taking. So we talk about people, successful people, talk about football, and then we obviously talk about real estate here on this podcast. You contacted me, I contacted you. We say, hey, let's bring you on, and here we are, baby. So without further ado, we'll go ahead and get this show started. And Robert, I'll give you a quick brief couple minutes to introduce yourself, who you are, what you do, and your company name, and go from there.
So my name is Robert Saenz. I've been in the mortgage industry for over 23 years. I've been I started off in August of 2000, something like that. I actually started off when I graduated from college. I went to Texas State, and when I graduated, I started off as a loan officer in San Antonio, and it was great and all, but I wanted a little something more, and so we started a brokerage firm when I think I was 23 years old, and we had a company called Liberty Financial, right? So we did that from 2000 until 2009, and it was a great run. I loved it, man. I loved it, but I wanted to get a little bit bigger, so we went retail, right? In 2009, and ran a couple of retail shops here in the Valley. And up until March of last year, I decided to go back to being a broker.
Okay.
And so it's been quite a ride.
And you're now with Adelante, right?
Right. So we started Adelante. Adelante has been around for a long time. Adelante is a hard money lender, but we decided to partner up and make it a wholesale division as well, so we have the best of both worlds. So now I run Adelante Wholesale Mortgage, where we do we run the gamut. Any type of loan that's out there, we've done it. We do it. We have lots of experience in doing it, and it's been something that has kept me very busy in the last year or so. So,
What part of it has kept you busy?
well, 2023 was a very bad uh,
No, now
market
you get me started on that
for
one.
for lots of people, right? For realtors and loan officers alike, and mortgage companies and all that kind of stuff.
Uh-huh.
The platform kind of changed from it was more favored for retail, and it just kind of seemed to go back to being on the broker side. At least that's the take that I took, right? So since I've been a broker before and I've done it before, I decided that partnering up and starting a new mortgage company as a brokerage firm would give me a competitive edge over the many mortgage companies that are around. And so, and it's worked in my favor pretty good. So I've been, basically, you don't see me out there too much, right? Hitting the streets and whatnot, because we are working on deals here in the office quite a bit, and so that keeps us pretty busy because we're offering very competitive interest rates and closing costs, and so a lot of clients have found their way towards us, and so that keeps us pretty busy. So that's for the last year. It's been pretty healthy. I guess healthy production coming in.
Yeah, so I do want to ask. I jot things down as you were mentioning them. I have a couple of questions. I want to piggyback off on the fact that 2023 was a rough year. To the point where, like, in November and December, I didn't close anything. I didn't close shit.
Yeah.
By the way, you are allowed to curse in this show if you want to.
Oh, okay.
I don't know if you do or not.
Over the floodgates, man.
Yeah, no, it's just like some people don't like to curse. I'm a big cursor. It's part of my I guess who I am. When I was football coaching, I cursed all the time. But anyways, a couple of things that I jotted down because I do know that 2023 was tough for a lot of people, and I'll just piggyback off of that real quickly. I didn't close anything in November. I didn't close anything in December. I was starting to think that, man, maybe this isn't the thing that I need to be doing because I don't know if you know this about me, but I was an educator for 11, 12 years. I picked up real estate in the year of 2020, and I've loved it. I've enjoyed it. I quit teaching in May 2023, and then you're going from a secure paycheck to okay, what's going on with the market? And so I want to say this, and I've been on this particular. I guess I've been riding this wave since November/December, where I had a breakdown and I just kind of figured something out. And I ran into a bunch of friends of, a bunch of people, everything for the right reason at the right time. I had a friend, I don't know if you know him, if you've done any deals with him, Mauricio Saldana, with Fox Realty or Fox Real Estate. I ran into him at Best Buy, and he said something, and I've been on this wave, on this trip of everything happens for a reason. You gotta want something to get it, and he said something. He goes, yeah, no, didn't football teach you to face adversity? And then since that moment, I just kind of been like on this trip of like positive thoughts. Yeah. And so New Year rolls around, and I've been nothing but been working my butt off, of course, but I've been busy, and today I was busy despite the fact that I didn't think I was going to be as busy. So I just kind of wanted to piggyback off of that because 2023 was tough, not just for, I guess, me or you, but for a lot of people. But you still had a healthy year. But I wanted to ask you a question. What you said retail a couple of times. What is retail? What do you mean by retail?
So retail is like a franchise, right? So if you have a mortgage company, you're not the owner, but you use their franchise name and whatnot, and you close loans through that main company, right? So retail mortgage company is going to be a one that they fund their own transactions in house, right? And then they'll eventually sell that loan on the secondary market. They may keep them and service the loan, but for the most part, they're going to sell that loan on the secondary market. And what I do is I go straight to the bank. That as a broker, I'm signed up with many different banks. Okay. And then I essentially become the loan officer for the bank on which gave the best rate. And badass. So go straight to there. So that helps with closing. as far as interest rate and closing costs, because there's no middleman, right? It's just straight up direct lending. Yeah.
So let's back up a little bit. You said secondary market. Can you explain to people what that means?
That means that mortgage companies, what they do is they bundle up loans, right? They take all these loans that they closed, let's say for the first quarter, right? And they'll bundle those loans and they'll sell them on the secondary market, or what that means is like those banks will buy those loans, those notes, right?
Mm-hmm.
Or they'll underwrite them according to the bank's guidelines, right? And that bank is contracted to buy that loan from the lender, right?
Yeah, and just to like, I guess, come from the consumer aspect. When I bought my house, Jonathan Lilly was my real estate agent.
He's a good friend of mine. Yeah, he's a good guy.
Yeah, good guy. He's my broker now.
Yeah.
Don't want to talk bad about him, right? No. So he helped me buy my house back in 2017, and I did it with I believe it was Cornerstone with Africa Gibb at the time.
Yeah, Africa's very good. Mm-hmm.
Yes. So that was my loan officer at the time, and he was my real estate agent. But as a newbie, as a rookie who doesn't know anything about real estate, especially when you're a first time buyer, and that's why, again, it's very important to have your real estate agents. Why it's important to have your loan officers, to have the people that are there to help you out and guide you. But I didn't know anything, and so 3 months, 4 months, 5 months rolls around, 6 months, I think, and on month number 6, I get a notice or a letter from in the mail, and they say, "Hey, by the way, you're gonna start making payments to this particular company." And I'm like, "What?" So I call and I find out what's going on. I think I called Africa. And I was with Oceanside. I think I was with Oceanside, mortgaging or Oceanside servicing at the time, and they bought
They bought your loan.
They bought my loan. They bought my loan. I was paying them.
That's the secondary market, right? They took your loan, or her company at the time is contracted to underwrite to their guidelines, and then they eventually pick up that loan, and then you start paying them, right? So,
but to even and correct me if I'm wrong, to even go a step further, because it was like 6 months or 8 months, even maybe like a few months after that, I got contacted by what is it called? Like an FHA streamline servicing.
Yeah, sure.
Well, I didn't know what that was, and I'm freaking out. So I called people. So if you want to touch on some of these things, I called people. I think I called Africa again. I don't know. Yeah. This was 2017. I was very skeptical. I'm a very skeptical person, Robert. To buy this can that I have right here. It didn't just I didn't buy it just from day 1 to day 2. It takes me a lot of time to make a decision on big decisions like that, and I get this FHA streamlining calls me and they go, "Hey, your interest rates have gone down. You can refinance and pay zero closing costs. All you have to do is skip one payment." I don't know if you want to touch a little bit about that. I know some people may have questions about that. If it's still is that still happening today?
Oh yeah. So if you have a loan, right, and you close a loan with ABC Mortgage, right, and they have your note, if the rates do tend to fall down, whatnot, that company is afraid that you're going to refinance and pay them off, right? So they jump the gun and go ahead and offer you a FHA streamline loan, and it's true, yeah, that lender that holds that note can do that for you and refinance without any closing costs, whatnot. So they keep your note and you keep paying on it, and you save yourself some money. So absolutely, that happens all day.
And refinance for another 30 years.
yeah, you may, or they can just do the same term. They're not going to add any more years, but you can do that with the same lender. Yeah.
I did it. So with Oceanside, I did it. I want to say 2 or 3 different times. And when I first got my house, I was at a 4.78 or 4.8, and I'm currently at a 2.7 with a what's it called, with a conventional loan. So I probably refinanced that thing 3 or 4 times. So people always ask, "Hey, Luciano, I want to buy a house, but the interest rates are high." I always talk about my example. Like, guys, you can always refinance. I refinanced multiple times, and I was lucky that I was able to do it with an FHA streamline, and then the final time I did it with a conventional. To my point, to even toot my own horn even more. I think I was either fortunate or lucky that I even got the mortgage insurance off.
Yeah,
After
you can get rid of it. Yep.
so like I refinanced it multiple times to the conventional loan, and I was able I asked for a BPO, and they came out and did a 80 to 20% value ratio or something like that, and boom, no longer have PMI. So I don't know if you want to talk a little bit about that as well.
Yeah, you can do that. So if you have a conventional loan and you do have mortgage insurance covers the lender in case of default, right? Because the less money you put down, the higher risk you are. And so lenders want insurance to know that, well, if they default, the lender gets paid off and they're insured, right? But if you buy a home and values increase tremendously or whatnot, some lenders, not all of them, but some lenders will give you the opportunity to remove your mortgage insurance if you can follow. They'll have some sort of steps to follow, right? And you can request a BPO or a new appraisal or whatnot. And if it's deemed that your loan to value is below a certain threshold, it might be 75% or whatnot, then you can discontinue the mortgage insurance for that and save yourself some money every month. So yeah, you did a double whammy. You got a better rate and got rid of your mortgage insurance, and
Oh yeah.
so somebody gave us some really good advice.
Huh?
So somebody gave you some really good advice. So that's good.
Well, I don't know if it was good advice or just me being fortunate. Like I said, the first few streamlines, I think I probably did it 3 or 4 total times. Every 6 months, they were contacting, "Hey, Luciano, interest rates have gone down. Would you like to refinance?" And I was refinancing for another 30-year term. So what would happen too, I would close. They would bring a mobile notary too. It was really cool. The guy was from New Jersey. He called me, "Hey, Luciano, we got this going on." Again, very skeptical. It took me a long time. I did some research on the company, and before I said it, but the second time or the third time, I felt comfortable enough that, hey, I can't remember his name. It was a Latin guy, Hispanic guy, but he was out in New Jersey, and he would say, "Hey, Luciano, interest rates have gone down. Are you thinking about maybe refinancing?" And I was like, you know what? Sure. So, but second or third time, I was comfortable enough with the process. By the fourth or the fifth time, remember the whatever the last time was, I asked him, "Is it possible to go conventional?" And that's when they did the whole process of, bringing a BPO, and the BPO came out. It says, "Hey, your house is worth this much. This is how much your loan is. We have an 80 to 20% value ratio. We can take it off." Let me ask you a question though, and I'm not too familiar with this, and maybe you can give some people some advice on this. So now that I'm at in the current situation that I'm in, would you recommend, yes or no, to remove yourself from being escrow? Can you just pay your taxes on the side, just call it a day, or do you just recommend to leave the escrow account intact?
Well, that's a good question, but that's really going to depend on how disciplined you are, right? Because if you remove those escrows and you don't pay your taxes or you don't renew your insurance on your own and whatnot, then you could be going down a path that you could find yourself hard to get out of. Because what will happen is that lender is going to, let's say you don't pay your escrows, you don't pay your taxes the next year, or you don't pay your insurance the next year, and those lapse. That mortgage company is going to pay off those taxes for you, and they're not going to loan you free money. They're going to charge you interest on the money that they're paying off and whatnot. And because look, the taxing entity takes first precedence on that loan, so on that property. So if they don't pay taxes, that jeopardizes the lien on the property. So of course the mortgage company get paid off. Now, and if you don't have insurance, which protects the collateral of the property, then they're going to force place insurance on you, and it's not going to be cheap. They're just going to get the first one. They don't care. They're going to put some insurance on there, and you got to pay it. So my answer to that is, if you're disciplined and you'll pay your bills on time and you will pay those taxes and insurance on your own, then take advantage of it and have a smaller payment every month. But if you're the type that forgets to pay a bill here and there, or it's not on top of your mind, then I wouldn't recommend that you do that.
Yeah, but a person would still have to kind of like, okay, so even though my monthly, the principal and interest is going to be smaller overall, I would still have to collect on the side, on a monthly basis. Just keep saving. No.
Yeah, well, well, your principal and interest stays the same. Nothing changes there. But your taxes and insurance aren't included in your payment. So you think you have a smaller payment, but you really don't. You still got to collect for that on your own, right?
Yeah, so that's what I'm saying. Like, I
But,
can just collect on the side for myself and be like,
right,
hey, okay, I'm collecting, 500, $600 a month for savings, for taxes and for insurance.
right.
But so then the next question begs this, if my monthly is, I'm gonna say $2,000 and half of that is taxes and insurance, wouldn't it be wouldn't it couldn't I not just continue making a $2,000 payment just for principal and interest, bring down the term of the term of the loan, and still kind of save on the side over here if I was able to?
Yeah, it's a very smart thing to do. So if you're paying towards your principal, then you will shorten the length of your term. So look at it this way: a lender can only charge you interest daily on your balance, right? They're charging you that interest, daily interest, right? And they have to disclose that to you on your closing disclosure or whatnot when you close for a property, whether you refi or purchase, right? But if you keep taking away the balance, then that limits the amount of interest that they can charge on you. Thus, it'll shorten the amortization of your loan, right? So if you have a 30-year loan and you keep paying towards that principal, you may make it a 20-year loan, right?
Yeah.
Because it just can't charge enough interest on you over that accrued time, right? So yeah, if you can pay towards your principal, absolutely pay towards it, right? But then again, going back to your escrow, you make sure you keep that money for those taxes, because if you don't pay those taxes, taxes
Okay.
are sure as death, right? They're going to come after you anyway.
So let me ask you another question. And I'm kind of veering off from my game plan here, but what happens? Okay, I miss a payment, or I'm making my payments. That. I'm trying to pay more towards the principal. This particular property of mine is my homestead. What happens with okay? Hey, by the way, you're not paying your taxes. Can you talk to us a little bit about, okay, what happens there? If this is our homestead, does that change anything?
Well, yeah, you're protected in the state of Texas. If you file your homestead, you are protected, right? But that doesn't mean if you don't pay your taxes that they won't eventually come after your home, right? Depends on how long it's going to take. If it's not your homestead, it's quicker. But if it's your homestead, then you are protected. And it's more lengthy, but it'll eventually happen.
So I'm brewing another question, Robert. Again, I'm veering a little bit off of where my game plan here. Okay, so I've had clients. I recently had a client where we sold their property, a lot. It's a lot, a land, an acre and a quarter, more or less. Not the only person that I know of that is in this particular case. They inherited a property. Okay, the property had tax liens on it. Of a good significant amount. The previous owner had the tax liens on this particular property, inherited the property. We were able to sell it. Long story short, we were able to sell it, and we paid off the tax liens and cool beans. But why wasn't that property ever and it was just a vacant lot? Why wasn't that property ever foreclosed on?
Good question. I don't know. You'd have to ask the taxing authority, right, or the taxing entities why they never took that property.
Does it depend on the city? Does it depend on the county? Does it depend?
It could be that they're backed up. They just never did. I have no idea. I can't answer that
We're
question.
talking about 18 years worth of
Was it 18 years?
Almost 18. It was like 15, 18 years, or maybe 10. Maybe it was
like it fell through the cracks.
but no, but see, that's not the only one that I've heard of. So this wasn't on that side of Mission, to the side of Palm View, Penitas, La Jolla, in those directions. I'm wondering if it's like, if it's one of those things where the city just kind of makes the decision to foreclose on it or not, or is it the county, or who? I mean, I'm not sure who. Maybe that we need to bring a tax accountant.
We need to bring like a tax guy or
guy on the podcast
authority to answer those questions, man.
Yeah, I mean, these questions were just generated right now based on the conversation we were
Yeah.
having, because it was very interesting to me that it'd been time. You're talking a good decade from the time that my clients inherited the property, and they obviously owed the money on it, but how come it hadn't been foreclosed on? And then recently, I was putting an offer on a property where they had the tax redemption period. So that one I understand, that goes back to it being a homestead prior, the previous owner. So they had that tax redemption period. I'm not exactly too sure how that tax redemption period works.
Right.
But I'm as far as I'm aware is that the previous owner can always come back and make a claim on it. If I'm not mistaken, they obviously have to pay fees and penalties and whatnot, but um, they have a period of time that they can go ahead and claim that, but they have to pay significant fees and penalty fees and all that good stuff.
I'm sure they probably would.
I almost wanted to do one time, but I was like, you know what? I don't know enough about this. I was a rookie, so I decided not to pursue it any further. But let's veer back. I mean, unless you want to add to this, let's veer back to my podcast guide, to my podcast guide. So you've obviously done this for 23 years. You know, can you tell us a little bit more about your journey? I know you talked a little bit about being from one company to the other company, and then talk to us a little bit. You said you've been in this business for 23 years.
Mm-hmm.
Talk to us. Give us some wisdom.
Well, okay, so I've seen a whole lot, right? And let's talk about the market, how it, the industry last year and whatnot. So it's cyclical, right? This stuff happens. We had the mortgage meltdown of 2008. Before that, it was probably the peso dropped, stuff like that. But I've seen this kind of trends before. And what happens is, and you mentioned earlier that you were thinking twice about it, right? Because you're like, man, do I need to be in this industry anymore or whatnot? And we call it trimming the fat, right? What happens is, you have realtors, loan officers, you've got support staff for title companies, for mortgage companies, support staff and whatnot. And what ends up happening is when you go through these cyclical markets, right? When industry gets bad or whatnot, people start to doubt themselves and companies start to downsize and whatnot. And that's what usually happens. But it always comes back, right? It always comes back. The Valley is really great because, I do loans all over Texas, right? But I especially like the Valley. And the reason being is because what I've noticed, and people may say I'm wrong or whatnot, but this is what I've noticed. I've noticed that even in a bad, like let's say the mortgage meltdown of 2008, where everybody else in the United States, or lots of places in the United States, home values dropped, right? You had a lot of home values that dropped. But the Valley, the values of homes just plateaued. Mm-hmm. And they plateaued for about a good solid year. And then when the industry got back on its feet again a year later, those values kept creeping up again. Yeah. And even with this market of 2023, I haven't looked at the data on it yet, but my feeling is that the values plateaued again. And now they're starting to creep up again, right? And so buying a home or whatnot here in the Valley is a pretty stable investment for yourself. If you're pumping money into a homestead or investment property or whatnot, my take is you're going to eventually get it back, right? And make some money on it and increase in value. And I look at it like a savings plan, right? If you're buying property, especially here in the Valley, instead of putting money in your bank, let it do some work for you, and it'll increase in value. In the equity of the property, right? So stuff like that, we see it, like, again, going back to it being cyclical. If you stay in this industry, then you're going to see a lot that got out of the industry, right? I've seen a lot of
even just last summer alone, there was like 60,000 real estate agents that left the nation.
Yeah, they got out. And what'll ended up happening is now you're getting busier. It doesn't mean that it's busier. You're just seeing more transactions. right?
Yeah.
Because now there's less of you out there, right? That to get a part of that market share. And so
I've
that's
been
what
a little
matters.
busy. I've been a little busy. You know, so I've been trying to figure out my schedule for the last since I quit teaching, right?
Yeah.
How to
What
time
did you
block.
teach, by the way?
I taught math. I'm a math
You're a
teacher.
math guy. Yeah.
Yeah, my personal email, in case you want to know it, it's math.guy552. I was pretty good at math, man. Give me a quick second. I'm trying to adjust my fan here.
No, sure.
I'm hot. I got busy. So I've been busy. How do I put this? I was trying to figure out my schedule since I quit teaching, and I couldn't figure it out. I started to sit down and man, to the point is, I guess what I'm trying to say is cruzó el año, got four properties, yeah, 4 properties on the contract.
Yeah.
I do that a lot, by the way, Robert. I go like, hey, properties instead of properties under contract.
Freudian slips.
You should see when I was coaching, man. When I was coaching, it was a different story. I always got made fun of by the coaches. I'm always going real fast, right? So 4 properties went under contract. I started to establish a routine where I'm gonna time block here for prospecting, because prospecting is the name of the game, right?
Sure.
Last week, I did not make a single block of time that I had scheduled to prospect because I was busy. So this week I said, you know what, I need to figure out how to handle that a little bit better. And I didn't. Today was chaos all over the world. Today I was running late, and then you have personal shit that happens as well. So, but you hit something in your comment right now. You said the Valley. Would you say the Valley is cheaper than elsewhere?
Absolutely.
Okay, so the reason I'm asking and bringing up this question is because I have an aunt who is looking to purchase here. She's from California, and we've been talking, and she goes, "Dude, it's not cheaper here."
Yeah.
So
it depends. What part of California is she from?
Well, that's a great question. I'm not exactly sure, but she says like it's the same thing. The only difference between here and the Valley is really just between where she's from and the Valley is the gas. Gas is expensive over there, so I guess the overallness of it all is. I guess if you get to, she goes, if you get to LA or if you get to these major cities, and yeah, you're talking about the cost of living is ridiculous. But if you go outside 4 or 5 hours from LA, it's really the same thing. The only difference is the gas. And I was like, I don't know. I mean, I know I was going down Pacific 101 as the main highway, the coastal highway, and we stopped real quickly just to observe the beach, and we saw this particular house, and we were looking at it, my wife and I. And it was like 1 point something million. I was like, there's no way this is 1 point something million. But it was like a 1 bedroom, 1 bath hut with a kitchen. And I was like, man, yeah. But that was that on along the coastal highways. I guess like an Airbnb or something like that. But she was explaining to me that it's really not as expensive over there as we assume. I don't know if that's something that we've been saying, and we just kind of got used to saying. This is a recent conversation I had within the last week with her.
Well, look. If your aunt's from Radiator Springs, California, right, and she's living in a little bitty town, and she's looking at a 1,500 square foot house, and she's going to compare that to something in McAllen, Texas. Yeah, she's going to be cheaper, right? It's not the same parameters, right? But
I need to ask her where
you need to ask her, right? So, but if she's from, I don't know, Santa Barbara or LA or Orange County, anywhere in there in Orange County, yeah, the price per square foot is going to be significantly lower here.
Yeah.
But I do a lot of loans for people from California. Lots of people are moving here from California. Lots of people from Florida are moving here because it's just a lot cheaper. Now, is it as cheap as it used to be 10 years ago? No, it's not.
Dude, it's not as cheap as you were in 2017.
Yeah. So it's still, still cheaper than, most places throughout Texas. Because you look, I do deals in San Antonio, Dallas, Houston, Boerne, Austin, and yeah, the price per square foot down here is significantly cheaper.
But even with all that said, like one of the things she was telling me, and like I said, I don't know the California market. I really don't. But in conversation with her, the taxes here are ridiculous. And even a conversation with a friend of mine who's out in the Arizona area, and I forget what Surprise. He's from Surprise, Arizona. Shout out to him, by the way, Scott Schultz. He's a good guy. I know that at one point we had a conversation where we talked about taxes, and the taxes here are ridiculous compared to the taxes over there. I'm sure Texas is different than the other states, fine, but it's a conversation, I think, in my opinion, maybe worth having with other real estate agents from different states, because I would like to know, is Texas really that much cheaper where, okay, everybody's jetting to the Rio Grande Valley? The Rio Grande Valley has grown a lot,
significantly. Well, I'll tell you, look, if you look at the whole tax conversation, right? So property taxes here are going to be higher than they would be in California as far as tax rates, right? But the big difference is in California, I believe they have your state income tax, which is a lot higher, right? So if you're making a lot of money over there, in the whole grand scheme of things, you're going to end up paying more taxes, whether it be income taxes or property taxes in California, right? So that's why people are moving over here, not because the taxes are cheaper. It's because the cost of living here is cheaper.
That's another question that I'm not 100% convinced, man.
Well,
my wife and I went to Oregon. We went to Washington last summer, and obviously we traveled right we went to Washington. I don't know if you saw some of our pictures. By the way, Washington is beautiful. Washington, Oregon is just beautiful.
Don't tell me you went to go see where the Goonies would play the game, where the Goonies had their movie, right?
No,
Oregon. Okay.
No,
everyone that goes to Oregon wants to see where the Goonies was made.
I wanted to see the Strawberry Mountains, and I don't even know. Is that a thing?
Yeah.
Is that a thing with the Strawberry Mountains?
I don't know much about it. No.
I was looking for them on my drive. I was like, hey, Google, look for Strawberry Mountains. I couldn't find them. So, but that was my whole point, And then I also wanted my wife to experience winter in the summer, which, by the way, we got an opportunity. We went out to Canada, we came down to Oregon, and we stopped at a grocery store at one of the hotels. We slept there right in Oregon, dude. What we would have spent maybe $100 here, we spent $50 over there.
Oh, right, yeah.
In the grocery store. I was like, why is it so? Is the next question? Are you talking about cost of living? I don't know. Is HEB a monopoly?
Oh, I don't know. It feels like it. What happened to all the old grocery stores that were here? Valley Mart. What happened to Carl's Jr.?
And Albertsons. We had an Albertsons here at some point.
Albertsons, right?
And
what
so
we have M. Rivas. What happened to M. Rivas, right?
I never went to that one.
Oh, that's probably before your time.
Yeah, I was about to say, man, that's probably before my time. But see, that's the question that I asked, and I think people get knocked it off. I love my HEB. I love HEB. I'd rather go shop at HEB than at Walmart, and that's fine. But when you talk about cost of living here in the Rio Grande Valley, I don't know that I can actually say it's cheap. I really don't think it's cheap. I mean, like I said,
with what you get, bigger. It's they're not small towns anymore, right? And so with the surroundings and the stuff that you get here in McAllen, the culture and the vibe and all that stuff that's around here, compared to offering the same thing in another big city or whatever, yeah, it's cheaper. But if you're used to a small town or whatnot, then no, cost of living here in this area is not. You need to go live in a smaller town. Go to Olmito or go to Port Isabel or go.
I'm gonna go to Alice. That's where I'm gonna go.
Yeah, I'm not trying to pick on any town, but I'm just saying it's cheaper over there if you want to go.
I honestly think that the cost of living has increased a lot around here.
Well, that's the whole reason we're in the predicament that we're in, right? Inflation, right? Mm-hmm. And so what happened was in 2000 it happened in 2022. Our inflation rate was going up so high that government stepped in, right? And government stepped in and raised the Fed rate, right? And when they do that, it increases the mortgage rates, right? And it puts the brakes on people buying, right? Because if there are too many people buying, then ultimately it will increase the cost of a home. And so they had to pump the brakes, man. And so that changed and jeopardized the market, for guys like you and me that do loans and sell properties and whatnot. And so that's the whole reason we had that year for 2023.
Yeah, 2023. I hope we never experience it, at least not for a while.
It's going to happen again. Look, it's going to happen again. It may be 5 years from now, and maybe it's some other trend's going to go by. Look, when we had the pandemic, right? We had I've got.
You have
You
cops.
hear that?
Yeah, I hear it.
Yeah. Look, when we had the pandemic, right?
Drama.
People were not. People were stuck at home. They weren't buying anything. They weren't going to restaurants. They weren't buying homes. So what happened? Well, we had to stimulate the market, right? And so they lowered interest rates like crazy. People refinanced. People were buying. Man, it started a frenzy of properties being sold, whatnot. And guess what happened? Homes went up in price like crazy, right?
Yeah.
It just happened that way. And luckily, guys like you and me took advantage of it when we loaned everybody money, and you sold a lot of properties and whatnot. But it also goes in reverse, right? So if it's too much, then the opposite effect happens, and you've got to slow down, and you've got to slow the market, right, to stop inflation, which affects the cost of living and whatnot. Gallon of milk is a lot more money now.
Yeah, I agree.
But hopefully that has slowed down, and that way we can get back to some sort of normalcy, right?
I have seen some sort of stabilization. Like, at least, I don't know if I can say that it's come down. I don't know that I can actually say
Not
that.
increasing anymore. Yeah. Which I think is great.
I think that in my house, I tell people all the time, in my particular house, I always run. I mean, every 3 or 4 months, I get on the MLS and I run the market analysis of my property just because I like to know. In October, November, I had done a market analysis of my property, and I was like at 270, 275. Recently in January, mid-January, I did another market analysis, and I compare apples to apples, oranges to oranges, and I was at more like 265 to 60. So yeah. I can see the trend, maybe either stabilizing itself or maybe going down. I don't think every single market is going down. I just think that my house, for the comparables that I use, I think it either went down or stabilized, because I bought my house for 140 in 2017. You know what I mean? Today, I'm about 260, 255, 270, 275. But I like I said, I've seen that shift down. So I'm thinking, okay. And people ask, should I wait for my house? Like, honestly, you do what you want, but my house is never going to be priced lower than 225 ever again. Ever. Even,
No, yeah, I agree with you. Yeah, I agree with you. Yeah.
I'm expecting it to hit 300,000 here in the next 2 years. So we'll see what happens. But I wrote something down. And it occurred to me as you were talking there. You're with Adelante today. Prior to that, you were with Supreme Mortgage, yes?
Supreme Lending, yeah. Mm-hmm.
Supreme Lending. What is the difference between those two companies?
Well, Supreme Lending is a retail, right, franchise that I opened up in 2019, March of 2019 is when I opened that one up.
Okay.
It's a great company. Yeah, Supreme Lending is a great company. I have nothing bad to say about them. But what ended up happening, and it happened to a lot of mortgage guys, whatnot, that have been running business for a long time, is the product wasn't as good as I wanted to be in the last year and a half, right? And so I'm always looking out for the fiduciary responsibility of my borrower, right? And so I wasn't offering the best deals out there, and so I saw it as an opportunity to take advantage of being a broker so that I could. and it's worked out tremendously. Yeah.
So, and the reason I bring it up is because you actually, I don't know if it was you or was it Ricardo. I think you had referred me out to Ricardo at the time.
Uh-huh.
Right? That's his name, Ricardo
Oh yeah, he's one of our loan officers. Yep. Mhm.
Yeah. So he's not with you still, right? With
Yeah, he went to the broker side as well.
So at the time, what's his last name? Sepulveda, right?
Yeah.
Yeah. So at the time, I had a client. He's a doctor, an oncologist, good guy, great guy, by the way. But he's an oncologist in Mexico. And your company or Supreme Lending at the time when you were with them, obviously you referred me over to Ricardo. And so I guess the question I'm trying to pose here is, how come you guys were able to save that deal, and Chase just kind of like shut it down? Like, I don't know if you recall that deal at all.
Oh, sure. Yeah. Well, I don't remember the name of the client, right? Because we do quite a bit of transactions.
Yeah.
But so some banks have what are called overlays, right?
Mm-hmm.
So in other words, if a borrower meets so many guidelines or whatnot, the bank will do the deal, right? However, there's some banks that don't allow some of those guidelines, right? And they're called investor overlays, or they're called just bank overlays, right? Where Chase Bank, I don't know what happened with them, but Chase Bank may say, well, we can't do this borrower because we don't do, I'll just give you an answer. We don't do a 640. Mm-hmm. And he may have been a 639, right? Mm-hmm. So then our company at that time, we did those types of loans. And so we were able to fund that deal and have another bank buy it from us. Right? Got it. Yeah. And I don't know if that was the case for that one, but that's probably.
Well, you know what? What I very distinctly remember, they shut us down because he put
they shut you down.
Yeah, the Chase shut us down because it was important to make that distinction, right?
It wasn't me.
They shut, and after that particular deal, I tell my clients, I try my very best to tell my clients, do not go with Bank of America. Don't go with Chase. Don't go with Wells Fargo. Go with these local lenders because they have your interests at heart, not these big banks. At least that's the way I feel. But anyways, is that we got a client here. He just commented, Lone Star shut us down. He's one of my clients. But he's watching, baby. No, but like so my particular client, he was an oncologist from Mexico. He's got his practice in Mexico. And he put McAllen MX, and the underwriting team went crazy. And I guess that was like a huge red flag for them, and they shut us down. And I was freaking out because I was wondering, okay, this guy's got his practice in Mexico. He goes in and out every day. I don't know exactly how you guys structured the deal, but I think you guys said something about a secondary home because he had a home in Mexico or something to that effect. But you guys were able to salvage the deal. Now, let me piggyback off to the comment that my buddy here, my client, just put out there. Do you guys do commercial?
We do commercial. We do have commercial lenders, but we don't do very much of it. We have the ability to do it, but we mostly focus on residential contracts.
So the client that just said right there, we got shut down. We're not shut down just yet, but we are shopping around right now, or trying to get different structures here and there.
Call me. Yeah, my number is flashing around the bottom of there.
Yeah,
so give me a ring. Yeah,
we'll see what we can do with there. But it is a commercial deal, so that's why.
We can do a commercial deal on hard money side, and we get those done really quickly. So
he's saying that they're asking for 33% down. I don't know.
He's trying to do a hard money deal. Yeah. It sounds like, I don't know.
He's with Lone Star, not Lone Star. So
I can't speak for them. Yeah, so I don't know.
I'll have him give you a call. Maybe
call me. I'll get him in the right direction.
Yeah. But Juan, you want to give him a call? You can come tomorrow, I guess, at 956-534-0129. Give him a call. Ask for Robert. Or that's your personal number, right?
Yes, that's my personal number.
Yeah. No, Juan, he does do some commercial lending, right? Robert? Commercial lending, but it has to be like hard money loans.
Probably hard money. Yeah.
Yeah. So try him, Juan, and I'll give you a call after this, and we'll figure something out, Juan. All right, going back to again, we veered off. You know, I told you I don't mind veering off. I really don't. I like to have conversations that just kind of like more or less flow. But I know I had questions that I wanted to kind of ask you about, and whatnot. And so I'm gonna look back at my notes real quick, Robert. I'm gonna look back at my notes. What do we got to say right here? Discuss how the broker's perspective differs from other aspects of lending process. Do you want to touch a little bit on that?
What was the question again?
Yeah, can you discuss a little bit how the broker's perspective differs from other aspects of the lending process?
Broker's perspective aspect of the lending process. Okay, sure. So, we as brokers, when we're doing a transaction, right, we can, of course, we're taking a financial snapshot of the borrower, right? We're looking at their financials, we're looking at their credit, so on and so forth, right? But the good thing about being a broker is you may not qualify with certain banks, but we know the guidelines to quite a few banks. So you will usually fall into another, loan that a bank may do and whatnot. So we're able to, as a broker, to make that loan offer to you, right? Depending on what your situation is. So, so looking at it that way, we have a lot more options than your local bank or your local retail mortgage company or whatever, right? We have a lot of options. Now, not to say retail guys can't broker deals. They can definitely broker deals as well. But we are just 100% broker, right?
So basically you guys can get a little bit more creative.
Absolutely. Yeah. We can, there might be a bank statement deal that we can do for you. Let's say you don't have income that show on your tax returns, but you do make income. You just don't like to pay Uncle Sam, right? You don't pay your tax. You don't do your tax returns in order to qualify. But there might be bank statement programs. There might be 1099 programs that are out there. There might be DSCR loans that are out there for you. There might be hard money deals that we could do for you. We'll always give you an option. When you go to a broker, we usually find the loan for you. To make you an offer.
So let's talk a little bit about what a DSCR loan is. Well, can you talk to us a little bit about what that is? What is a DSCR loan?
Well, DSCR loans are based on, look, if you're buying a property and you're not going to you don't show income or whatnot, we can go as a no income loan for those, right? But those loans are based on the rental income of the property, right? So if the property generates good rental income, whatnot, then the bank is more apt to loan on that property. But you still got to put quite a bit of money down. Those are high risk loans because you're not verifying income, whatnot. You're going off the income of the self sufficiency of the property, right? So the borrower still got to put money down for those. But they're a good loan. They're for people that just they don't have the documentation that they need to buy that property, whatnot. Interest rates for those are going to be a little bit higher because the bank's going to take advantage of the risk, right? So they're going to charge more on the interest rate. But those are just one type of loan that are out there. There's all kinds of loans that are out there that we can do as a broker.
So my client,
what's a hard money loan?
What's a hard money loan? That's where I was going next. What is a hard money loan?
Hard money loans are for people that just don't really. We can only do them on investment property, right? And therefore, people that that's their last option, right? Let's give you an example. I'll give you an example. I have a borrower that owned it was a washateria. It was a washateria. Mm-hmm. And the washateria's paid off. The property's worth probably $350,000, whatnot. And that borrower went to his bank because he needed to borrow $75,000 for whatever business expenses he needed or whatever. And the bank wouldn't loan it to him. He didn't have his financials correctly yet. Credit was fine, whatnot. So he came to me and said, look, I've gone everywhere and no one wants to loan me this money. So we look at it as risk, property-based risk, right? Well, if we're loaning him $75,000, the property's worth $350,000. Yeah, we more than likely are going to make him a loan, and because look, if he doesn't pay the property or doesn't pay the loan, we'll obtain a property, right? But we're not here to take people's property or anything, but it's an option for them. So we call them either bridge loans, right? That's a nicer way of saying it, or hard money loans. Interest rates on those are going to be higher, but we'll get the money for them right away for whatever purpose they need, right? We had one that he needed to borrow money to pay for his payroll, right? He had he bid, yes. So you put the property as collateral, right? Right. We're looking for that property as collateral.
Yeah. Good stuff.
So,
good stuff. Well, I mean, we'll have him give you a call tomorrow. That way you can discuss some options for him.
Yeah, he can call me tomorrow.
Yeah, so that way we can go ahead and we'll see what we can figure out right there, baby. So let's come back to the guide again. And my next question to you is, get a little bit more personal to the aspect of Robert. Robert doing this, been in the business 23 years. Some memorable stories, something that this was my first home that I saw. How did you feel about something like that? Is that too long ago? I don't know.
Yeah, they've been a little too long ago. I just remember the main thing that I could take away is, and I can speak for a lot of loan officers. I can speak for support staff, for underwriters, whatnot. That satisfaction of helping somebody obtain their dream is something that is. It's a great feeling that not very many people get to experience, right? And so, when you get that call from a dad who he said, Bob, nobody would help me, but I'm so grateful that you were able to, help us to afford to buy this home and guided us to get this property, and now my kids have a shelter and whatnot. There's nothing that compares to that, right? So, those are great things that you can experience as being a loan officer. Yeah,
I feel that. That's good. And I have a very similar story. First, I have the one where I got my first paycheck as a real estate agent.
Yeah.
That was too long ago. That was 3.5 years ago. But it took me about 7 months, 6 to 7 months, 8 months to get my first paycheck because I didn't know what I was doing. Not to mention I was still teaching. But I was very nervous because I wasn't doing shit, and finally I closed my first one and I was very excited. And man, I thank my broker for everything he had done with helping me and whatnot. Jonathan Lindley helped out. He goes, hey man, thank you for all your guidance. And I was really excited, man.
I remember when Jonathan was brand new in the business.
When was that? Like
it was a long time ago. I remember it was a while back. Yeah,
2005 he had started.
Look, I've helped a lot of realtors. It's their and they've been around a long time, right? But I've helped, and I'll probably, if there's realtors listening to this, probably like, don't say my name, But I've helped a lot of realtors with their very first transaction, right? And they always remember. They'll always say, "Man, you did my first transaction ever," and it makes me feel good because I've done it for a lot of people, right? To help them the first, and we're still doing business together because, I work hard for all those transactions. Because look, I know that you are self-employed, and if you don't make that transaction happen, I'm self-employed as well. If it doesn't work for me either, nobody makes any money, right? And so we do everything that we can to make sure that property gets done or whatnot. That your client gets what they want and all that stuff. So that's why I've had those relationships for that long.
And you know what? You talk about relationships. In relationships, you have to have communication, and I think that that's super important. That everybody, from the loan officer to the buyer's agent to the listing agent, everybody is communicating. When that's something that I've learned in the last 3 or 4 months. The more you communicate with somebody, the smoother a transaction goes. You're
Well,
talking about
communication is key.
yeah,
Absolutely.
yeah,
Communication is key. Yeah.
and it builds the relationship with obviously the buyer's agent and the realtor. I mean, the buyer's agent, and the lender, but of course you keep the listing agent happy as well, and the listing agent will try and keep the seller. So I'm a big believer right now. Where I mean, I know sometimes we try to say, hey, don't tell the listing agent, just wait till Monday or wait till Tuesday just to give them an update. But I'm a big believer that we're gonna be better off if we just let them know upfront.
Yeah.
And
If you run into a problem on a loan, right? I tell my loan officers, if you run into an issue where an underwriter is giving you a hard time or whatnot, or it is what it is, right? I tell the loan officer immediately, you're going to let all parties know, right? But you're also going to let them know I'm looking for a solution, right?
yeah,
Or you let them know, you find a solution first, and then you let all parties know, and then everything will be fine. But it's very rare that I have anybody upset with me or anything, because I'm always letting everybody know uh, the transaction, how it's going. I send out these preemptive emails, and so the next thing you know, the realtor is not focused on trying to get the transaction done. They're focused on the next transaction, right? And so we close that deal right away, and they're super happy. And I always send a little link out or something that says, give me your review, give me, because I'm not afraid to do that, right? Because it always goes pretty smooth.
no, for sure, dude. Like, but for me, I just the smoother the transaction goes, I think it's because there was so much communication between all the parties involved, and you've been doing this long enough that you've had your relationships built with your real estate agents. Me, I'm just kind of learning that now. Like at first, I was like, man, do I tell the listing agent that this is happening, or do I tell the buyer that this is happening? You know, I really quickly learned that the more honest I was with somebody, the smoother everything went. Like
Yeah.
there's no point in hiding anything. Just be upfront about it, and everything's gonna be fine and dandy. Even with my sellers, when I represent sellers, hey, the buyer didn't get approval. Luciano, dale ese dinero para atrás. Let's go. Let's move forward, baby. To that point, I've had clients like that on the selling side, where I go, hey, the buyer is having a hard time with getting financial, and they're requesting their earnest money back for whatever reason. He goes, Luciano, I've had one that says, can we split it half and half? The other two said, dale el dinero para atrás. Let's go put the property back in the market, and let's go. Didn't even fight, didn't say anything like that. So I was cool. You're entitled to your money, but again, just different.
Yeah. Honesty is the best policy.
Yeah, so that's just kind of like what I've learned, and I've been on that boat about 3 or 4 months now, and if I can be upfront about something, I will. I try my very best to be upfront about something. So anyways, so we've already talked about the different market trends, in the last 23 years, but moving forward, what advice would you be able to give home buyers looking to buy property today, and what advice would you be able to give, or are you willing to give aspiring brokers or loan officers?
Well, let's talk about someone that's wanting to buy a home, right? First thing you should do is just know where you stand financially, right? Put all your ducks in a row. Look at your financials. If you get your bank statements together, look and see what kind of money you have. Um, you know, Visit with a loan officer before you go out looking at homes and whatnot. Go visit with a loan officer. Look, I'd love to take every deal in town, right? But visit with a loan officer. It doesn't have to be me. I'm just saying, visit with a loan officer, so that way they can look at your financial status, right, and see what you're doing, right? Know what your credit score is, right? So get a credit monitoring service that keeps an eye on your credit. You don't know how important credit is in your livelihood. You need to have decent credit to get yourself a good deal, right? So know what your credit is, do your homework, do your research on it. But the other thing too is, once you have that in the home buying process, then do your research on your loan officer. Do your research on your lender, right? Look them up. Look at their reviews. Look at their pricing. Look at all that kind of stuff. Shop your interest rate. Absolutely shop your interest rate, right? Um, and find yourself a good deal, right? Because there's a lot of good deals to be had out there. You just got to find the right people to get it done for you, right? So that's what I would recommend. Now, going on someone that wants to get into this business, right? What I can say is that, and you can probably speak from experience, is find yourself a good mentor, right? Find someone that's going to take you under their wing, and not say they're going to take you under their wing and then kind of blow you off. They need to literally, make time for you. Come, you need to, but then take advantage of it too, right?
Yeah.
If they're offering you help, then you show up to the office and you ask for it, right? That's what I would, highly recommend. Find yourself a mentor, someone willing to help you, because that holds a lot of weight. It really does. You can get your license and you can join any brokerage or any mortgage company or all that stuff, and they'll give you a lot of self-help stuff, whatever, and eventually you'll find your way, right? Yeah. But if you can get yourself a good mentor, someone that's going to really look out for your best interest and genuinely try to help you, that's what I would highly recommend to do.
So I want to piggyback off of something you said with the buyers. You said get your ducks in a row, or get your ducks in a line, right? Get your ducks in a row.
Yeah, sure.
Remember the exact expression. I always have a hard time with that. What do you say to real estate agents? Because I'm guilty of it. What do you say to real estate agents that show homes before getting pre-approved?
Oh, you're looking at tire kickers, right? You're looking at tire kickers. Look, look, you don't want to lose a client because you don't want to show one home. So go show them one or two homes, right? And show some and get some vested interest in them, right? Mm-hmm. But then again, once you're done with that, make sure that they visit a loan officer, right? Because if they're not going to visit a loan officer, 9 times out of 10, they're not going to get anything done to buy the property, right? So, if they're adamant they want to go see it that Saturday and you don't know if they're pre-approved, absolutely go show them the property. But then again, make sure that they visit with a loan officer, right? Someone that's going to pre-qualify them. Now, when they get pre-qualified, that doesn't mean that they're going to go to some mortgage company and they're going to pull credit and that's it. The loan officer needs to do their due diligence, right? The loan officer needs to look at their financials. They need to look at their bank statements. They need to know where this money's coming from, where they're buying a property. If you have a loan officer that just pulls credit and issues a letter and says, "Here you go, man," you're not doing yourself any favors, right?
I had that one time and it didn't work out too well for me.
No, it's going to happen to a lot of realtors, man. There's some loan officers that do that, and it's unfortunate, right? Because it gives us a bad name. But if your loan officer will, do their due diligence, look at their financials, look at their credit, and make them a solid offer, right? And not, maximizing them to the very limit to, you're gonna buy $350,000 house. Well, it's probably better to do 335 to have some leeway, right? Yeah. But so when you have a well-seasoned loan officer, that's what they're going to do for you, right? And there's a lot of them here in town, but there's a lot of them that I don't know any better.
I feel like that's what kind of, and I may be wrong. I mean, like I said, I don't like to talk bad about people, but I think like the big banks like Chase, Wells Fargo, and Bank of America, they say, "Hey, I'm trying to get myself pre-approved for a home." I think that's what they do. Oh yeah, how much do you make? Okay, sounds good. Here's your pre-approval letter. I may be wrong. I don't know, but that's the way I feel with these big banks. Because I'm actually dealing with one currently, or was dealing with one currently. He's an on and off kind of guy, but it was with Bank of America, and I mean, I told him, I go, "Sir, I have a hard time getting a hold of your so and so lender because I have to dial all these 7 digits after I dial 2, after I dial 4, and finally get a hold of him." And sometimes, I'm trying to get a hold of him 4:30. He's already gone home. So I finally put him with a lender here. He finally agreed to that, and I just feel like those big banks are exactly that, what you just described, where they don't do their whole homework. I think they just think that we're just a statistic or a number. I want to piggyback off another question, another thing I wrote down here. I've used this word before, but I want to know where it came from. What the hell is a tire kicker?
Tire kicker. Oh, that's an old saying, man. Look, if you were a car salesman at one time, right? Let's just say you're a car salesman and you got people that are looking at cars, right? And all they're doing is just kind of kicking the tires, right? Just kicking the tires. They're not really going to buy. They're just there to spend some time, right? And that's an old saying, a tire kicker. It's a tire kicker.
Like earlier, you heard me say the word. I don't remember what the word was, like property under contract. That's like concrete or something like that.
Uh-huh.
At some point, I thought this was a can kicker. You kick the can down the road a little bit further. I thought it was a can kicker, and I'm thinking it's a can kicker. It's a can kicker, not a tire kicker. A tire kicker, but I'm pretty sure it's a can kicker. But I don't know, man. I mean, there's all kinds of crazy shit all over the world. Let me see. Robert, we're about to finish this up, with an episode here. I know it's been fantastic having you on here, but before we leave, do you have anything else? I know we got kind of started and we veered away a lot from the actual guide that I had here. Do you have anything to say or add to any of the segments or the conversation that we may have maybe skipped over something? You maybe want to add something?
No. I think that, I'm just grateful to be on this podcast, right? Or live cast or whatever we call it.
I'm grateful for you being here. So it is a podcast, and I'll talk to you in a little bit in about 2 or 3 minutes when we end it. But it is a podcast. It is live on YouTube currently. In fact, Mr. Juan is on YouTube right now. And then we'll talk to you in a little bit about a little bit more logistics of it. But I just want to thank you for being on here, man. I know it's time consuming from time to time. Hey, I got to take an hour for this, and sometimes we take a little bit more. And then, I'm just trying to, and I'm sure for you, it's at least some sort of advertisement as well. Whether it's on my Facebook, your Facebook, it's on YouTube, it's gonna go out there in the world and all that good stuff. So I'm hoping that it helps you. I'm hoping that it helps me, and we're out there. And so Mr. Juan just said, whoop, whoop.
Well, what I'd like to say is I just want to wish all the mortgage loan officers that are out there and mortgage companies, everybody alike, hey, the business is out there, and I wish everybody the very best, right? I always have, and I think that this year, we are going to get a little more busy, right? It can only go up from here. And if you're on the fence thinking like, I don't know if I want to do this anymore, stick with it. It'll come through, and you'll be happy that you did.
And if you are on the fence, give me a call. We'll talk a little bit about that, because I'm like I said, I told you earlier on this episode, I'm on this whole trip right now. I'm riding this wave where everything for a reason. Put a positive mindset, positive thought, positive frequencies is what I'm trying to give. And it's very easy, Robert, correct me if I'm wrong, but it's very easy to be negative. So easy.
Oh, yeah.
Like, just waking up on the wrong side of the bed is it'll start your morning. Like, I had a bad start to this day, and I was trying to flip it all day, dude. It just wasn't working. And it didn't start working until about 2 o'clock. Something happened. There was a shift there. But all my morning this morning, to the point, I went to go work out. Dude, I'm not even lifting heavy no more. Like, I'm lifting lightweight. Like,
no, me too, man. I lift lightweight. I'm getting too old.
I was a 600-pound squatter. Right now, I'm squatting. I hit 315 for a few reps. I said, this is it. I'm done right here. But believe it or not, and I've been doing lightweight for a while now, I think I threw out my back. And I'm like, dude, seriously? Like, this didn't even happen at 600 pounds, and at 300 pounds, it's
be surprised as you get older, man.
Man, well, I heard that you can be picking up a pin on the floor. That's what my chiropractor always says. You can be picking up a pin and your back can be thrown out. I was like, I know you're right, but I don't want to believe you. Robert, thank you so much for being on here, and just hang back a couple seconds, and meanwhile I end this, and then we'll go ahead and let you go. All right, thank you everybody so much for watching, and I appreciate you. If you have any questions, you got Robert's number down there at the bottom. Adelante Mortgage 956-534-0129. You got my number. Give me a call if you just want to talk about anything. We'll talk about positive day. I'll hook you up. 956-862-1556. We got Juan saying peace.
Peace.
Peace, Juan. Peace out.
Peace out.
Go ahead and end this now.